One of the best ways to learn how to trade or code an algorithm is to look at an example. In our book, Algorithmic Trading Systems, we show you just how to do that. I have an example here I want to show you for crude oil gap fill in reverse. And I'm going to show you how to code it. I have an update in the code for gap fill in reverse to take long only trades, and I'm going to show you why. Crude oil, one of the best markets to trade for volatility. This strategy, we released it in 2015. Here are the historical results. Here is here are all the trades. Here's the long trades. Here are the short trades. You see the total number of trades. You can try different parameters. You can try different time frames. But here is the equity curve when you take in consideration all long trades and all short trades. And so I've updated the code to either turn off the shorts or the longs. And right now, if you're bullish crude oil, it could be a good time to turn off the short trades. And I want to show you how you can do that. I'm going to close this down. You can change the strategy. Here's a sample of some of the code. These are just the parameters. There's nothing proprietary about this. This is how you set up the code to show inputs. The actual strategy is above this, but I'm going to show you how to set up the long and shorts. I've added this, so you see those in the inputs, and I've renumbered it. But there's some additional code up there you can get from the members area. The additional code, you can do this in Tradestation under Format Strategies, but in NinjaTrader, you have to code it in. And so you see take long trades, take short trades, those are both checked. And in this new update, you can turn off the short trade. So let's uncheck that, and we'll only take the long trades. And so then you can see the equity curve, what the equity curve looks like with only long trades. And then we're going to wait for that to update. It takes a little bit of time for all the trades to go through because we're testing it. The back test goes back to 2006 for 12 years. So I'll pause the video and start it again when it's fully, all the trades show up. So you see some of the trades here. Let's take a look at the performance summary for this. Long only side, you see the short trades disappear and the long trades here. And so you see the long trades only, you get $100 average trade profit. Let's look at the equity curve. And really nice equity curve since this time period. Let's look back at 7/1/2010 so we can see what the max drawdown was since 7/1/2015. So the last couple of years, what is the drawdown? We have bigger drawdowns. The biggest drawdown occurred here, about 7,000, but that was after a huge run up. And so the market was very favorable to the long side right here, and then massively reversed down right here. And we know that, the time period of 2008 2009, crude oil made a huge move higher, and so it went from 18,000 all the way up to 32,000, so it made about 16,000, and then it pulled back about 7,000, and then it moved higher again. So if you get a massive spike in crude oil, one of the ways you could trade it is gap fill in reverse, to take the long only trades, and then when it does reverse, you could give a lot back. And so you could manage that on your side. It's difficult to manage and call tops. There's no way to call tops, but this is one way. Even if you trade it straight up, it's still net profitable. So the thing you don't want to do is you don't want to get in right here. After a huge run up, crude oil's at all-time highs, start trading a long only strategy. It's not there yet. The good news is this equity curve is up, and we've pulled back quite a bit in crude oil. And so this equity curve it's not in a drawdown, but it hasn't accelerated to the upside either. So the drawdown, the last couple of years, I'm going to give you the number for that. I'm going to adjust the date so we can see that. So since July of 2016, you see 11,450. The max drawdown is only 1,650. So if you lock into this current market environment the last 2 years and 3 months, your worst case drawdown is 1,650. Stop loss is 500 per trade. Average trade profit is 128.65. So a nice strategy if it continues in this current mode, and if it spikes higher, it's possible that we could see it could be potentially profitable the way it was in the past, or it may. Past performance is no indicative of future results. So it could go into a drawdown. So if you don't have this strategy and you want to get it, you can get it from our website, algorithmictradingsystems.com, and you can learn how to trade this crude oil. You get the open code on gap fill and reverse, and I am updating the NinjaTrader 8, and so I will have that to you. If you want this by Monday, if you sign up here and you have NinjaTrader 8, you want this by Monday, email us, david@capstonetradingsystems.com, and we will get the code to you by Monday if you purchase this. And that is the update for trading crude oil through the rest of the year and going forward into 2019. One more thing I meant to show you is how to trade this in Tradestation, how to set it to long only. Here's gap fill and reverse in Brent crude. So you can trade this in Brent crude, nice equity peak going forward here from June of this year. This is a strategy we've put out back in 2015, and so you see the out of sample performance. This is with $25 round turn slippage and commission, and you see the average trade profit on that and the drawdown on that. And if you want to trade it long only, I'm going to show you how to do that. You go format strategy. And then once you have that, you go, you see here on Tradestation, you can go sell short. You just turn that off. And so that's inclusive of all strategies. Any strategy that has a sell short signal and long signal, you can turn them off or on or exit only. And then you select OK, and then I'll update the performance summary for you. All right, here it is on the long only side, and you see really nice equity curve. There are a couple of times when this is really pulled back, and the worst case drawdown in this is 53, 55. You know, crude oil is a volatile market. You have to have capital, but you can manage this, and potentially with the money management algorithms that I have, you could eliminate those drawdowns since there's only 2 of them. And if you know the trend of crude oil, if you anticipate higher prices, you know what it ought to do. And when the trend is up, it ought to not have that kind of drawdown. So you could minimize, you could have a tighter stop on your equity curve. But that is Brent. If you want to trade Brent crude, if you want to trade it in TradeStation, NinjaTrader, MultiCharts, you know now how to do long only, gap fill and reverse, and how to prepare for any big time bull markets in the crude oil market. If you want to day trade it and you don't want overnight exposure, this is one way to manage your risk and maybe capture some of these moves if you're willing to risk some of these worst case drawdowns.